everyone. In today's video, we'll go over the top 5 volume indicators on TradingView. If price is the heartbeat of day trading, then volume is the blood pressure. Sure, doctors care about keeping your ticker pumping, but they also know blood pressure that's too high or low could be a harbinger of problems down the road. Price and volume work the same way. Yet too many traders never take advantage of the tools available. They restrict themselves to a chart with a volume histogram added at the bottom. We may buy and sell at the prevailing price, but analyzing the volume provides crucial insights into the strength and potential of market movements. That's why we're going to introduce you to what we consider the 5 best volume indicators on TradingView for day trading. Number 1 is volume profile. Imagine you enter an open-air market to buy apples. You learn that just before you got there, 10 people bought an apple at $1, while 1,000 people bought an apple at $2. How much do you think you'll be able to buy an apple for? You might get lucky and find a deal for $1, but chances are you'll be stuck with a $2 price. If you plotted the price and volume of those transactions as a horizontal histogram, you'd get a volume profile. On an S&P 500 E-mini futures chart, it would look something like this. You get a horizontal histogram overlaid onto the price chart. This indicator contains 3 key pieces of information. The point of control. This is the price level boasting the highest traded volume, often highlighted with a red line. This can also act as a magnet for future price action. Profile extremes. This is the lowest and the highest prices traded within the period under review. The value area. This encompasses the range where a significant majority of the trading volume occurred, usually 70%. The value area high and value area low can typically serve as a barometer for market consensus on value. While this profile is just for one session, you can use it over any time period you want. When we analyze this volume profile, we can see that the POC lands at approximately 49 3/4 or 49.5. Price will often move away from low value areas and towards the point of control. Here we can see in the morning session, price rallied, established the point of control here, and then traded around the point of control. Every time it traded below it, it was bought back up and traded back into the point of control before eventually selling off into the afternoon session. Day traders often use the point of control, the edges of the value area, and profile extremes as support and resistance levels to frame their trades. Taking today as an example, originally we had the POC up here around 49.5. Price came down and established a new POC. The profile low was set in at 22.5. And we can see that price came back up to this value area. And as it started to trade down, if we zoom in here on the 1 minute, we can see that as soon as it hit 22.5, which was the value low, it retraced about 5 points from that. So that could have been a good scalp potential, especially going into the close. I was looking at this to develop a trade thesis and idea. I have to say I didn't think it would trade down much further than that, but that was probably anybody unwinding their position before the close of the market. But nonetheless, we can see that as soon as it hit this value low, it retraced 5 points before continuing down. Number 2 is volume weighted average price, also known as VWAP. VWAP represents the average price for an asset weighted by volume across a time period. You've probably seen this yourself if you bought one ES contract at say 4,900 and one at 4,850. Your volume weighted average price would be 4,875. VWAP is an incredibly powerful tool used by traders to compare themselves to the rest of the market. It's a fantastic tool to measure sentiment. Plus, day traders will use VWAP as support or resistance levels. Here's an example of how you might use it. This is a 15-minute bar chart of the S&P 500 E-mini futures. The blue line represents VWAP. Notice how when price traded above VWAP, it never came back down below it. Effectively, traders were willing to buy ES futures at a price worse than average. If you're willing to do that, you've clearly got a bullish outlook. From the start of the anchored VWAP, we can see that price came down and traded into VWAP, but quickly reversed. And it did that again on the 11th. While these types of price reactions aren't guaranteed, if you study charts of everything from futures to stocks, you'll see it happen more often than randomness could account for. Number 3 is on-balance volume. It's easy enough to identify price jumps and plunges on heavy volume. All you have to do is look for a quick price change and a spike in volume. But how do you know how relative that volume is to recent price history? That's where on-balance volume becomes immensely helpful. OBV starts with the baseline, then it adds volume when the candlestick closes positive, and subtracts volume when the candlestick closes down. That might not sound all that useful, but let's take a look at an example using the S&P Mini Futures. This is a 5-minute chart of the S&P Mini Futures. Here we can see that before the open, we established support at 55.19.5. And as we came down to test this support again, we can see that the on-balance volume did not make newer lows. This represents that although price made newer lows, it was making newer lows on waning volume and actually precedes a price reversal. Day traders use OBV to look for divergences to give them clues about when the market might be due for a reversal. They'll also look at confirmation of a trend when both price and the OBV are moving in the same direction. Number 4 is accumulation distribution. Similar to OBV, the accumulation distribution indicator tries to represent volume that's either being accumulated, bought, or distributed, sold. The difference is in how the two are calculated. OBV simply looks at whether the close of one period is above or below the prior period's close, adding or subtracting the volume accordingly. The AD indicator does the same thing except adding volume when it closes in the upper half of the day's range and subtracting it when it closes in the lower half. While these indicators often provide similar signals, they will diverge, especially when there are price gaps. Just like the OBV, day traders will use the AD indicator to look for divergences and trend confirmations. This 5-minute chart of the S&P Mini Futures highlights a clean example of when price diverges from the AD indicator. We can see here that the S&P rallied at the open, establishing a high on the AD indicator. Price came off and tried to push up again, but failed. At this time, the AD indicator was making new highs, suggesting that the additional buying could not push price further. Therefore, when price dropped below this range, buyers started puking their positions, and price made a new low. Last on our list is the Chaikin money flow. Like OBV and AD, CMF measures volume buying and selling over time. However, while the AD is a cumulative metric, CMF normalizes the volume by comparing the money flow volume, which adjusts the day's volume based on the closes position within the high-low range, to the total volume over a given time, usually 20 to 21 periods. This normalization process makes the CMF less sensitive to one-day volume spikes and better at discerning price reversals and trends that are more sustainable. In this example on the 5-minute chart of the S&P Mini Futures, we can see that the market established a few key levels before the open, and then at 7:05 we started to break this range, came back down to retest it, and then broke out of this range. At this point, as price continued to move upwards, we can see the Chaikin money flow continued to make new highs here, and then also here. But as price continued to move upwards, we start to see the Chaikin money flow failing to make new highs, suggesting that this move was overextended. And here at this double top, we can see that price failed to make a new high, and the Chaikin money flow was much lower than what it was on the move up. Mastering volume indicators can be a day trading game changer, but their true value comes when you integrate them into a broader analysis. The 5 key tools we've unpacked are volume profile, VWAP, OBV, AD, and CMF. They unlock deep market insights you won't get from typical price indicators like moving averages or Bollinger Bands. That's all I have for you today. I hope you enjoyed the video. If you have any future questions, please visit us at optimusfutures.com. Thank you.